Welcome back. You're watching Trade of the Week. Today we bring you a technical analysis on BHP, South32 and Richemont. Petri Redelinghuys, founder of Herenya Capital, joins us with that analysis. Thank you so much for your time, Petri. Petri, I am quite surprised that you are coming in here with shorts, out of sectors that I would expect would be plays for the Chinese trade that we have seen recently, but you're saying no.
For a moment, I thought you were teasing me because I'm Afrikaans and it's cold outside. I was like, wearing shorts in the winter? So yeah, look, I think that you know, even if you've been watching this program for a while, you'll know that I've been very bullish on some of these stocks, and some of them have run really, really hard. So by no means is this a long-term change of view.
Okay.
Right? So the China story is still one very much that we back.
Yes.
However, you know, when things run up 20-30% in a week, it's maybe a little overdone, right? There's quite a bit of short squeeze happening, I think.
Okay.
And I think that we just have a bit of a pullback. So these are very speculative trades that we have this week, with very tight stop losses, and we're not looking to ride them for massive moves. We'll probably be in them for a couple of days. The market pulls back a few percent, which I think it might start coming off a little bit because it's run really, really hard in the last few days. If the market starts to pull back a little bit, these things have run up really high. They should come down. If you don't want to take the short trades that we talk about today, that's absolutely fine. It's not a bad idea to then maybe where we look to close the shorts, you look to go long.
Okay.
For a longer term sort of bullish trade. We just bought some of these things. They've done really well. You know, when they've run really hard, some of the things are up like 10% in a day. You know, at that point, you know, take the money, right?
Yes.
And we think that they'll probably come down somewhat. And if that provides an opportunity for us to ride it on the way down and then switch back to long when they've hit support levels, then that's what we're going to do.
All right. Well, let's start off with the specific ones that you've chosen today, and particularly in that resources sector, you've chosen South32 and BHP. Let's start off with South32.
Okay, so I'm just going to show you this chart. I think that's the best place to start. So to give you a sort of an idea of the perspective we're talking about here, the size of this move over the last couple of days is 17%.
Wow.
Right, and that's in, what is that, 1, 2, 3, 4 days. Right? So that's wonderful. Great.
Yes.
Love it. Yes, it's been fun, but I think that maybe we probably see, we've left a couple of big gaps here, we probably see price kind of settle down around these moving averages here, which are the longer term moving averages. And if we have a look here, they are the 89-day, which is green, and the thicker blue one is the 200-day moving average. So I think once the price gets back down there, that's our target for the short trade. That could be a long entry again for you know, longer term long traders. But for the short trade here, what we're looking at, and I'm going to really zoom in here, so please forgive me. This little candle formation here essentially is what, take the magnet off. This little candle formation here is not looking super bullish, right?
Okay.
So that middle candle in there is essentially called a spinning top. If this candle closed a little, or opened lower and managed to close at the lows, that would be a shooting star. However, it opened higher.
Yes.
At the moment, it looks like it's making what's called a hanging man. So a spinning top and a hanging man, both are generally bearish reversal candle patterns. And that, after having left such a big gap, after such a massive move, it seems probable that we could maybe even come down and test this 38.50 or 38 level as a potential pullback before the trend continues longer.
That would be a significant pullback.
That would be quite a big pullback.
Yes.
Yeah, that would be a big one. But look, I mean, we can see that this stock isn't afraid to make big moves when the time comes.
Yeah, indeed.
Not so long ago, it had this fall from 42 down to sort of 36 anyway.
Yeah.
This, we believe, is a bit of a support level here. We think that it does show signs that this trend is starting to change. I mean, even if we look at a weekly channel here, for example, or a weekly chart, we think that it does show signs that this trend is once again sort of heading higher. But for now, on the weekly chart here, you can see that little bearish formation that we see there is sort of aligning with our weekly 89-week moving average here. So we might see a little bit of a retracement back down to support before moving higher.
Yeah.
We could be wrong, right? So it doesn't necessarily mean that this is the trade that you should be taking.
Yes.
But we feel that some of these things have just overcooked a little bit. In the longer run, yes, the China trade is still very much on for us. And we think that commodities are going to benefit very strongly. But in the very short term, as in for the next week or so, we'd rather be short some of these things.
Well, how do you protect yourself? Because, I mean, you talk about very tight stop losses here. So
literally you would say in this particular scenario, I'll use the little trade indicator, take our little line off here.
And I actually do note what you're saying as well, that the stock isn't afraid to go on either direction. There was actually a point, I think it was in September, somebody on Stockwatch actually asked why South32 is lagging behind the other diversified miners. So quite interesting moves there.
So essentially, if we look here, this would be the recommended trade that I say. So now this is, again, maybe for some people not the greatest of trades, because it is a very tight stop with a very high risk reward. So to be fair, if your risk reward ratio is sort of a 1 to 2 or a 1 to 1.5, and you are willing to take, be a bit more patient and take a bit more sure thing trades, you can get a hit rate of 70%. So what does that mean? It means that 70% of the trades you get right. Okay? But your risk reward ratio sometimes is even on stuff like that, 1 to 1, right? So for every rand I lose, I make 1 rand, but I make money 70% of the time.
Okay.
My personal trading style is one where the risk reward is much higher. So this is like a 1 to 5, right? Or almost, this is about a 1 to 5, yeah. 1 to 10. It's a massive risk reward ratio. I mean, initially our actual sort of shorter term target would be there. So you could take half the money there, half the money there if you wanted to. But the probability of being wrong is much higher. So you've got like a 50-50 chance of being right, but if you do get it right, you make a lot more than, so it's a very tight stop. You basically stop out above the highs of yesterday. Maybe give it a little bit of breathing room, because if the big institutions are watching this, they'll know all the short stop losses are there. So, give it some space. But you don't want to really be in the trade if it breaks yesterday's highs.
Okay.
If it breaks yesterday's highs, you want to get out. Alternatively, you sit tight until it hits either sort of that 89-day moving average, which is kind of around 41 now. If it gets down through the bottom of 41 and down through sort of 40.50, you might be able to open it up for, say, 38.50 as a full target.
All right. Well, let's move on to another resource counter, and that is BHP. Talk to us about why you've chosen this one as well.
Basically the same reason, right? Again, we have a situation where we've had a massive run, so we'll measure from here to where we are today.
Oh, that looks big.
So that's another 13.5%, right? Again, we have some reversal candles, this time exactly on a long-term moving average, so on the 200-day moving average. Smacks a reversal candle in there. Today we opened low and traded higher, which is great. But even from a momentum perspective, it seems that we might start seeing a bit of a taper down in this upward momentum, and that pullback, I think, is essentially on the cards here, maybe to say 500, potentially as low as 480. So again, from a longer term perspective, it's interesting when this channel broke, but anyway, I'll remove that for now. From a longer term perspective, we do believe that long is probably the right side of the market here. It's not the world's greatest chart. But from a very short-term perspective, this week to next week, maybe the week after, essentially we think that within the next sort of 5 to 10 days, we should see that pullback and this trade will be over. At that point, you could probably go long again around 480, 500 in that region.
Do you think that someone is best placed to go into the resource sector on a longer term? Due to the stimulus that we're seeing in China, or maybe that would kind of be one of the last places that you'll go to, one of the last places that will actually experience a big rally in the longer term?
No, I think resources are well placed. I think China will outperform the US, over the next sort of 3 to 5 years.
Yeah.
It's interesting to me because we've been speaking about what happens when the interest rates start coming down for the longest time.
Yeah.
So a few things happen. Property prices go up, property stocks do well. I think the base case scenario that I've sort of explained to you in the past, at least what our belief is that in the beginning the market reacts very positively.
Yes.
Yay, interest rates are cut. And the next thing, Trump wins the election. Yay, Trump wins the election. And then about 6 to 9 months later, reality sets in like, wait a minute, interest rates are being cut because the economy is under pressure.
Yeah.
This is not a good sign, right? And if you look historically, every single time the Fed has entered into a cutting cycle, the US enters into a recession not long after. So you can actually say that, you know, the market kind of leads the economy by some, or leads the economy generally, but you could also argue that the interest rates are being cut because the economy is under pressure.
I mean, even the fact that the Fed did 50 basis points.
Oh yeah, and they're talking about potentially another 50 before the end of the year. So that's not necessarily a good sign. The market's going to see it as great, you know, free money forever. Here comes the stimmy checks. But the reality is that they're doing that because things are getting tougher, right? So how does this play out? We don't know. We know that historically when this happens, generally a recession follows. We do also know that coming out of recessions, commodities are the first to move and move extremely strong.
Okay.
We also have a view that there is a bit of a power shift from west to east.
Yes.
I think we've discussed that as well. So for those reasons, I think that being sort of bullish on commodities, bearish on US tech stocks, and bullish on Chinese tech, for example, is probably a good position to take.
Okay, well, let's get into luxury because that's been beaten down quite a lot. It's not just Richemont, it's been across the board. But actually, we saw that sector being one of the big ones to take in a rally there after the stimulus package was announced. But now you're saying you actually want to short Richemont.
Yeah, so I mean the record is broken. It keeps saying the same thing. We've again had a 15 and a bit percent, 15.7 or call it 15% rally in a very short period of time. That's basically 3 days. And if you look yesterday and today, which being Monday, Tuesday, that momentum hasn't really carried through all that much. So that makes me think that maybe the party's over a little bit. Again, we're just looking for a short-term pullback. So in this case, we're again aiming for a moving average, generally the safest bet. The 20-day moving average is around 2,550. So there's about a 200 Rand move, 150, 200 Rand move on the short side here. Again, stop loss would be above yesterday's highs. First level of take profit would be 25.50. Second take profit level would be sort of 24.60, maybe go 24.80.
Yeah. This stock also is another one that isn't afraid.
Yeah, look, I mean, if you look historically, okay, well, there was a bit of a share situation here, corporate action. But yeah, I mean, it generally trades in a relatively large range. It just doesn't generally move this fast, right? It had a big downward slope here on the back of some news. That is now sort of suddenly forgotten. I'm not so convinced. I think that we probably have a good opportunity to get short here. I would try and take the money at 24.60, and in that sort of range of 2,460. Could it go lower than that? Potentially, I'm not 100% sure. But for now, again, we have what very much looks like a topping pattern, at least from a candle charting perspective.
In terms of a long-term view, though, I mean, I hear the points that you've made on the resources. What about luxury, and considering the fact that the Chinese consumer still really isn't too confident to spend their money?
Well, how long is long term? Let me ask you that, because if we're going to look at 50 to 100 years plus, the rich will get richer, and the luxury will get more luxurious. That's just how it works, right? It's very sad, but it's true.
Yeah, capitalism at its best.
So, is luxury a good sector to be in if you're thinking 100 years out? Yeah, right. Is it a good sector to be in if you're thinking 5 years out in a difficult economic environment? In the short term, sure, yes, maybe everybody's, bonds come down, your car installment comes down, your debt payments come down. Hey, let me max out my credit card again. Luxury will probably benefit from that, right? In the medium term, if economic conditions are more difficult and there is a bit of a recession, I think people are going to stop buying the Gucci bags and maybe just start buying groceries instead. So I think that that's potentially an outcome. So I wouldn't be super bullish on Richemont for the next 5 years.
Or would you also say maybe you just need to be picky as well if you are going to play in that luxury sector?
Well, there's not a huge amount of options, really. We've got Richemont here, and we've got a couple of, a handful of offshore, a handful of offshore options, and that's basically it, right? So I don't know. I mean, luxury is a resilient segment, as we've seen. Generally, the ails of the normal man are not so felt by the people who are buying Cartier watches, right? It's generally just how that goes. So it's a robust sector, I think. Will it be under pressure in the short term? Probably. Yeah.
All right. Well, thank you so much for your time and giving us that technical analysis on BHP, South32 and Richemont. And just letting us in on how to play it in the short term. Thank you so much for your time, Petri. That was founder of Herenya Capital, Petri Redelinghuys.